Welcome to the Loveland Report and Lone Ranger Show. I am Cleve, Loveland, Central Florida's best real estate planner, alongside Bruce Woodburn, the Lone Ranger.
That's
every
me.
weekend. Thank you for tuning in. We bring you your real estate news, your mortgage news, what's going on in the real world. We are not talking pinheads that just read a bunch of reports.
No fake news.
No, we are not fake news. We are in there doing the transactions and selling the houses, giving the mortgages. Bruce has a safe here. I just saw it. They left it open.
Oh, it's full of money.
Tons of money in it.
Yeah.
And Bruce, I'll
give you Cleve's address because I keep the safe at his house. So if you want to know the address, we'll give it out.
Don't dox me. Don't dox me. Numbers are out for the, I want some really good trends with the numbers on inventory and sales, days on the market. How many days does it take to sell? And then holiday selling. I want to jump into that. We're getting into that period. I start getting the calls literally October 15th. I get the calls. Oh, can I sell during the holidays? I think my plans will, I'm retiring in next month. Is a good time to sell. We'll go into all that today. What do you have today, Bruce?
I want to talk about people that may be retiring that no longer have the income that they were accustomed to, but they have assets. And can those assets be converted to an income stream to help you qualify? Because you think about it, if you each getting Social Security, let's say you got $4,000 a month between the two of you, but you need $6,000 a month to qualify, you don't have it. And if you don't have it, you can't qualify. We have ways we can convert an asset stream into income. And I want to talk a little bit about that because there's a lot of our retired folks that just struggle with that. I'm talking to one right now, and they went to their bank. It took them months from their bank. The bank's trying to do some crazy adjustable rate mortgage that creating a no-doc loan. And I looked at it and I went, you don't need a no-doc loan. You should get a great quality loan. You don't have to have a no-doc loan.
Well, no-doc means a little higher interest rate.
Well, of course it does.
Yep.
Absolutely. I mean, the less documentation, the more you're going to pay in interest.
Show me your dirty laundry. You're going to get you're going to get the rate you deserve, So
yeah.
Where are we bouncing on rates right now?
We're still running in the 6.3%.
So trended lower over the past 60 days. Fed didn't do much.
It's really remained pretty steady with the government shutdown. We actually had
it's actually been good.
It actually has been good.
That's
and then, this week when Trump announced the additional potential tariffs on China, you would think that would have spooked the market, but it did spook the stock market.
Yeah.
But you have to remember that when it comes to mortgage rates, sometimes negative stock trading is positive for bond. Yeah. So bonds are doing really well. We are right now about where we were the day before the Fed dropped the Fed rate.
Okay. But we got a 90% chance of another Fed cut on my birthday, October 29th.
Yes.
What do you think that'll do? We're going to float back up a little bit?
That right now is your opportunity because you usually have about 2 to 3 weeks before the Fed cut when you're really going to see the benefit of it. So many of you think that once the Fed drops the Fed rate, rates are going to go down. Look at the bond charts. Yeah. I'll show you the bond charts and you can look for yourself and see the pattern of what interest rates do after a Fed cut.
Bond charts determine what all mortgage companies are getting their money for.
Absolutely.
And that's why one company can't be quoting you 5% on a 30-year fixed and have the same APR as you would. You all get your money from the same place.
They're all mortgage-backed securities. So if you're looking at conventional or FHA or VA type loans, your agency loans, we call them, they're all going to be based off the bond market. So you're right. I mean, if one company, and I've had veterans are the ones that are getting scammed the most because they get these companies going, I get you a 4.99%. Then they call me and they go, hey, Bruce, is this right? This company offered me 4.99%, but it looks like they got about $25,000 in closing costs in there. No. And it's your big companies that are screwing you on that. I'm telling you, you don't think that because USAA or Veterans United, because they target veterans, don't think that they're the best opportunity. Check it out. Do your research.
You don't want to get churned. You don't want to be refinancing every 18 months.
They'll tell you it's time to refinance, whether it's not. Or
that's in their script. They're reading off their computer
screen. And I don't
screen.
want to tell you, listen, I'm not trying to badmouth my competition. I really don't care what they do. But you're the ones that get taken advantage of on that. So if you have questions, you call the Loan Arranger. I can be reached at 407-250-9144. That's 407-250-9144, or WeBringYouHome.com for an honest answer on whether you should buy or refinance right now. Cleve Loveland, he can be reached right now, the voice of real estate. Where
All right,
can you be reached?
407-352-8118 or cleveloveland.com. I'll be working all weekend. I've got 3 offers sitting on the front seat of my car. I got to go talk to some sellers this afternoon. But also, I want to dive into these numbers, Bruce. This is actually some good news.
It's great news.
I mistakenly, called the market. I think did I have to buy you a steak dinner for that? I called the market back in January saying, this is it. It's going to start going up. And it didn't. It got worse. And so I think we're seeing signs of glimmers of hope here. Inventory has been about the same average, about a 5.5 month supply the past 1, 2, 3, 4,
Like
5,
7 or
6,
8
7,
months.
8 months,
8
the same.
months, yeah.
And we came down from last month. Now slightly. We came down like 2%.
Okay.
It came down from 13,003 to 13,000 homes for sale. So this is the first time we've even come close to beating last year's sales. Last year in September, 2,249 homes sold.
Yep.
This year, 2,245. So literally the same number there.
Yep.
So that's good. Numbers of new listings. The number of new listings is less than last year. And that trend has been the same for the past 6 months. Not as many homes coming on the market.
Right.
So, and that's good. New contracts. Now this number.
This is the number we're looking for right here.
This number beat last year by 15%. 2,300 new contracts, 2,350 in September, over 2,000 last year.
Well, what
and
that
interest
tells
rates,
you is that people are finally going, you know what? I'm not going to get in the market.
It's time.
I'm ready.
And because I want to let you talk and we'll go into numbers on appreciation. But like last year, rates were actually a little better. Last September, we had that couple weeks there where rates were 5, 8, 9.
Yep.
And right now their average on here is 6.05, depending on what kind of mortgage you're getting. Call Bruce to figure that out. But I think that's some really good numbers. And this is where I look to see, like, next October, this month, October, November, December, we don't have, like, last winter's numbers were dismal, Bruce.
Right.
The fall and winter
They
of
were
last
horrible.
year were dismal, and January was even worse.
We
So
should have just
not hard to beat that. Like,
we'll
we'll get the participation trophy. We're going to be able to beat these guys with one arm tied behind our back. So good things happening. I got a lot of people making plans, calling me about their real estate plan. I had 4 downsizers in the past 2 weeks calling me, and that's 2 sales right there.
Absolutely.
That's 8 sales, and these people have been thinking about it. And when I did the numbers for them and showed them what they're trying to do, gave them their numbers, they're going to talk to their financial planner. They're all going to come back to me and say, yep, this is a good thing. And we're going to get them on the market over the next couple months.
Well, we're seeing the activity pick up in the market, not just for purchases, but for refinances as well. Now, we expect it for refinances because as interest rates drop, people start to look at refinancing. Right now, I think the best opportunity for refinancing are veterans and FHA, current FHA. Conventional, I think that it's not quite as attractive if you're trying to refinance a conventional loan to a new conventional. I think that going from a 30 to a 15 year, it can be very attractive. If you can cut that term in half and from a 30 to a 15.
So their payment might not change much or might even go up a little bit.
Well, it's going to go up a little bit, but you're going to knock off hundreds of thousands of dollars
over the
interest.
next 3-4 years. Yeah.
So if you can swing that payment now could be good, but I'm finding that debt consolidation is really the hot spot. But for me to take a client on a conventional loan that's currently got a 7.25 and get them down into the low 6s sometimes is not enough of a payment reduction to truly
doesn't make it worthwhile. Yeah,
it's got to move the needle. And here's the thing: a lot of these lenders will convince people to do that, and I don't think it's the right thing. So some of those people may need to wait and see if things get a little bit better. We do expect the Fed to drop the Fed rate in October on your birthday. Happy birthday. I think they're going to do it again in December. Mid-December, we have another Fed meeting. I think there's a good chance it'll come down another quarter. But those little increments are not needle movers. They're just not enough. Now, I'm not saying it's not the right thing because I don't think the Fed should make massive drops at any one time. I think that knee-jerk reaction doesn't do anything positive for the market. So little increments it'll get a little bit better, and we'll see if interest rates drop. Now, the thing is that just because the Fed drops the Fed rate, if that ends up stimulating the stock market, because we know, you see the stock market's taken a hell of a beating here just in the last week and a half.
A little bit. Yep.
All right. Well,
Scared
we're
of
down
tariffs.
about 650 points, I think
I think it's back today, though. So,
well, it may be back today, but we took a hit. And I'm going to tell you something. When everything comes back and things get back to normal, we could see interest rates pop up if that stock market starts to rally again.
Now, but the other, okay, here's another thing. The Fed rate does affect everybody out there with a HELOC.
Yes.
And we're supposed to get a cut this month and a cut in December. And that's probably going to have the rate like 1% lower. Now, where people will see this is on their credit card bills. Hopefully you're not carrying big balances. I'm sure you see some of those. But on your HELOC, your payment should be going down. It saves people a little bit of money.
You're not going to see a 1% reduction when they only dropped it a quarter.
No, I'm saying from last year.
Okay.
The first cut was last December. So we'll be almost a point lower. So, but those little things there, the stock market doing well, confidence is returning, plus equity building. I've got how much time we got?
We got about 2 minutes.
All right. So I've got numbers here on appreciation. The median price and the average price, Bruce, they've been appreciating over the past 4 years through the Sleepy Joe hangover.
Yep.
And right now they actually were flat this month, which is kind of rare. So they stayed the same, 380 on the median price, 483 on the average price. So literally exactly the same, but people are building equity. They've still had some appreciation around them. I just went to see somebody 3 months ago. They had about 5 neighbors competing with them. All those neighbors are sold. And I think there's one guy still hanging on way too high. I'm not even worried about him. When you got the same house price, 50,000 less, I'm not worried. He's not competition for you. Nobody's even going to go look. They're going to go, why bother? This is it.
Well, I think whatever reduction in value that has been anticipated has really happened. And I think that some places, I've got a couple of clients right now that are looking to refi. They bought their home a year and a half ago, and it did not come up in value. And in some cases, it might have even dropped a few $1,000s in value just in the last year. So those kind of things can happen. Listen, you can't look at real estate and go, I'm going to make money every single month. Sometimes you're not going to make money, but I will tell you, real estate in general is always a safe place. It's like a 401k where somebody else is depositing the money into the account. It's a perfect way to build money and build wealth. And here's the thing. A lot of Americans don't know how to save money. They don't know what to do to truly save money. So a real estate transaction forces that savings.
Forces you to save. Yeah.
You're going to save money. And even if you
does a rental property
money,
Mm-hmm.
it will help you save money.
Yep.
So if you don't have the ability, you're like, I don't have any money in savings. I'm not doing this. I'm not maxing out my 401k. Buy a piece of property. It'll do it for you.
Yeah.
Listen, Cleve Loveland can be reached now at 407-352-8118. Cleve is the voice of real estate here in Central Florida. He can help you in any state. You want to buy in another state, he'll connect you with his team in other states, and he can help you. You want to get a mortgage or refinance, you want to buy in Tennessee or North Carolina, I can help you with any of those transactions. I lend in all 50 states. Cleve Loveland, 407-352-8118. or cleveloveland.com. Bruce Woodburn, I am the Lone Ranger. You can reach me now at 407-250-9144. That's 407-250-9144, or go to WeBringYouHome.com. We'll be back in 5 minutes with more of the Loveland Report and the Lone Ranger Show. Do not go anywhere. What do you got when we come back? Big stuff.
Come back. I want to dig into months of supply and getting your house ready to sell.
Be back in 5.